Good morning. We will pay attention to VAT on sales and ledger accounts today. Sold goods to T. Low on credit for 23,940, VAT inclusive. So that means the VAT is included in this figure. If VAT is included, then the figure is worth 114%. The 114% is given to us as 23,940. The VAT is 14% and the sales price exclusive of VAT is the actual income for the business that will increase the profits, and that is 100%. If we want to calculate the VAT, the one that we want, 14, divided by the one that we know, 114, and that will give us 2940. If we want to calculate the sales price, the one that we want, 100, divided by the one that we know, 114, and that will give us 21,000. The sales price VAT exclusive is used to calculate the cost price. Profit of 25% on sales price is maintained. If it's on sales price, then the sales price equals 100%. The profit equals 25%. Therefore, the cost price must be less than the sales price, so we will deduct the 25, and the cost price is then 75% of the sales price. If we want to calculate the cost price, the one that I want, 75, divided by the one that I know, 100, and that will give us the cost as 15,750. The debtors control is an asset. Asset increases on the debit side and decreases on the credit side. The debtors will increase with the sales amount and the VAT amount. So the total amount for sales and VAT will increase the debtors, and that is what they owe the business. VAT output is a liability because the business collected VAT on behalf of SARS. Liabilities increase on the credit side and decrease on the debit side. The VAT will therefore be credited with 2,940, and we will indicate that the double entry is in the debtors control account. Sales is an income. Income increases on the credit side and decreases on the debit side. The sales increase with the 21,000. That means in the sales account, you're not allowed to have more than 100%. So there can never be VAT included in the sales account. Because the VAT is paid over to SARS, it does not form part of the income of the business. The amounts in the sales account and the cost of sales account are the amounts that will be transferred to your income statement to calculate the profits. For the cost of sales, we will debit cost of sales because it's an expense, and expenses increase on the debit side with 15,750, and we will indicate that the double entry is on the credit side of the inventory account. Inventory is an asset that increases on the debit side, decreases on the credit side when we sell goods because now we have less inventory. Sold goods to R. Swart on credit for 15,000, VAT exclusive. So the VAT is not included in the 15,000. The sales price including VAT is 114, VAT is 14, and the sales price excluding VAT is 100%. And that equals the 15,000 that's given to us. If we want to know what is the total amount that the debtors owe us, we want to calculate what is the 114. So 114 divided by the percentage that we know, 100, and that will give us 17,100. If I want to calculate the VAT, I will take the VAT 14%, divided by the one that I know, 100, and that will give me 2,100. a profit of 30% on sales price is maintained. Because it's on sales price equals 100%, profit 30, cost price must be less, so the cost price is 70%. We use the sales price excluding VAT to calculate the cost price. So if we want to calculate the cost price, the one that we want, 70, divided by the one that we know, 100, and that will give us 10,500. The debtors control will be increased with the total amount that the debtors owe. That means the sales price and the VAT. And we will credit the VAT output account to increase the liability for the money that is owed to SARS, 2,100 Rand. And we will credit the sales account with 15,000 to increase the income with 15,000. For the cost of sales, we will reduce the inventory with 10,500 and indicate that the double entry is completed in the cost of sales account. Cost of sales will be debited with 10,500. VAT of 4,200 is included on goods sold on credit. A profit of 20% on sales price is maintained. They give us the VAT, so that means the 14% VAT equals 4,200. If we want to calculate the sales price excluding the VAT, it means that we will take 100 divided by the one that we know, 14, and that will give us 30,000. If we want to calculate the total amount that the debtors owe us, I will use the 114%, divide by the 14% that's known, and that will give me 34,200. The profit is on sales price, so the sales price is 100 and cost price will then be 80%. So if I work out 80%, it will give me the cost price as 24,000. The cost price is calculated on the sales price, excluding the VAT. The debtors control account will be increased on the credit side with the sales price and the VAT. The sales will increase the income with the 30,000 excluding VAT, and VAT output will increase on the credit side with the 4,200 that is owed to SARS. Inventory is decreased on the credit side with the goods that were sold. So when you buy inventory, you increase inventory on the debit side with cost price, and if you sell it, you credit the inventory account with the cost price on the credit side. The cost of sales account will be debited with 24,000 to increase the cost of sales expense. Sold goods to low on credit for 23,940, VAT inclusive. So that means this figure equals 114%. And in the debtors control, you write the 114%. So it means that I have to split this figure between the sales amount and the VAT of 14%. If I want to do this calculation, the one that I want, 100, divided by the percentage that we know, 114. Or if I want to calculate the VAT, the one that I want, 14, divided by the one that we know, 114. I can also look at the ledger accounts and say the debtors is 114%. We want to calculate the inventory now. So if I want to calculate the inventory, the one that I want is 100. The one that I know is 114. And if I want to calculate the VAT is 14%. That is the one that we want, 14, divided by the one that we know, 114. So you can use your ledger accounts to do the calculation in a quicker way. sold goods to Swart on credit 15,000 VAT exclusive. So that means this is the figure of the sales amount because there's no VAT included in that figure. The sales is 100% and they've given us the figure as 15,000 because it's VAT excluded. If I want to calculate the VAT amount, it means the one that I want, 14, divide by the one that I know, 100. So you see it's very important to determine whether the VAT inclusive or exclusive amount is given, because you can see here that those two calculations is not the same. So if you don't read very carefully, you will make a mistake. So the sales figure will increase the debtors on the debit side, and we will calculate the VAT and we will credit the VAT account 14% of the 15,000, and we will record the figure in the debtors control and in the VAT output account. In number 3, the VAT of 4,200 is given. That means the one that's given is the VAT as 4,200. If I want to know what is the sales figure now, the one that I want to calculate is 100. The one that we know is the VAT, so it's divided by the 14 times the 4,200. What did we learn? Determine if the sales price includes VAT or not. If the price includes the VAT, then the amount is equal to 114%. If the price excludes VAT, then the amount is equal to 100%. Determine if the profit is made on cost price or sales price. If the profit is made on cost price, then the cost price equals 100%. If the profit is made on sales price, the sales price equals 100%.